In Budget 2021, one area where the government has focused a lot is the infrastructure sector. It would include construction of highways, bridges, ports, road, power distribution, and many more. And one sector that would immensely benefit from infrastructure boom in the country is cables and wire sector. If you have recently joined my channel, then I covered a stock in cable and wire segment 5-6 months ago during December 2020. It was Polycab. At that time, it was trading somewhere around rupees 1000. And I told that this is one stock that can give multi-bagger returns in the future. Today, it is trading at rupees 1700, giving close to 70% return within 6 months. Today, I again want to cover another stock in cable and wire segment. It is KEI Industries. In the last 5 years, KEI shares has jumped from rupees 105 to rupees 630. That's 6x return in last 5 years. Now the question is, can KEI continue to generate such returns and become a multi-bagger stock? We will investigate in this video. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. This is the 30th episode of Stock Fundamental Analysis, and as usual, we'll start with understanding the company and its business, its leadership, competitive strength, competitors, key risk, future growth prospect, and financials to decide if KEI is fundamentally strong or not. Then we will cover the valuation analysis to understand if it is worth investing in KEI at current levels or not. But before I proceed, I want to clarify that my stock analysis is only for educational purpose. My analysis is for a long-term perspective and I do not provide short-term tips. The intention is to empower you with right knowledge. For more structured content on stock analysis and many more, you can explore my online course. Alright, let's get started. While KEI was incorporated in 1992, it was established in 1968 as a partnership firm under the name Krishna Electrical Industries with the main business activity of manufacturing house wiring rubber cables. Today, it has grown into a huge empire offering holistic wires and cable solutions. It manufactures and markets extra high voltage power cable, high voltage power cable, medium voltage power cable, low voltage power cable, house wires, control cable, solar cable, and stainless steel wires. In fact, KEI is one of the few companies in the world that manufactures extra high voltage power cable. If you look at the business segment of KEI, it has mainly 3 business segments. First is institutional segment where it deals with corporates and big clients. Then it has got retail segment and EPC service that include your engineering, procurement and construction service where it set up the transmission and distribution system of power cables. In FY21, the company generated a total revenue of rupees 4,181 crore, and out of that, institutional sales of cable and wire contributed 53.46%. Its retail segment contributed 33.68% and it is followed by engineering, procurement and construction, that is EPC services, with 11.15% contribution. If you look at the revenue breakup by product category, low tension cable contributed 37.48%, high tension cable contributed 16.46%, house wire contributed 21.69%, extra high voltage cable contributed 10%, and engineering, procurement and construction contributed 11.15% in the total revenue. Again, the revenue is nicely spread across product category. If you look at the sectorial breakup of its cable and wire products and services, it has usage in sectors across power, oil refinery, railway, automobile, cement, steel and so on. If you look at the leadership of KEI, Mr. Anil Gupta is the chairman and managing director of KEI. He joined KEI in 1979 as a partner when it was known as Krishna Electrical Industries. So he has more than 40 years of experience in cable and wire sector, and he is the man behind the exceptional journey of KEI from a small partner firm to a company with a current market cap of somewhere around 5,600 crore as of June 2021. Overall, on company and its product portfolio and leadership, I would rate it 10 on 10. If you look at the competitive strength of KEI, its first strength is global presence. KEI has a global presence with product exported to 80 plus countries. Next strength is diversified product portfolio. Company has a huge product portfolio of cables and wires catering to industrial and commercial use as well as domestic consumption. Next strength is extensive distribution network. KEI has a strong network of 1650 plus dealers spread across the part of country. Next, it has 40 years of experience. KEI has a wide experience of 40 plus years that helps in building the top quality products that satisfy the stringent technical norms and competitive cost structure of government agencies as well as other institutional requirements. Next strength is backward and forward integration. Company is backward integrated and manufacture its PVC used as raw material for building the products. This gives them cost advantage. On top of that, company is forward integrated where it also established the transmission network including the government projects. If you look at the competitors of KEI, it includes your Polycab, Phenolics cable and Universal cable. If you look at the key risk, the major risk is raw material price fluctuation. Increase in raw material prices of commodities like copper, aluminium, steel, etc. could impact the profitability of KEI. Moreover, the cable and wire sector is highly competitive, so KEI needs to continuously provide top products at competitive rates. Overall, on competitive strength, I would rate it 8 on 10. For the Indian economy to grow, one sector that would be a key focus is infrastructure. Indian government has a strong focus on building the infrastructure of the country and this would benefit cable and wire industry. The Indian cable and wire industry has grown at a CAGR of about 13% in the last 5 years to reach 64,600 crore by FY 18-19. The industry is projected to grow at a CAGR of about 11% to reach rupees 1 to 1.1 lakh crore rupees by FY 23-24. For example, the government has launched an initiative called Power for All, where the focus is on providing electricity to every household in the country. There is a strong focus on renewable sector as well. Now this would require cables and wires. KEI also provides transmission line setup services. Government has set up a budget of rupees 100 lakh crore for infrastructure development including your railways, road, public institution and many more. There is also a strong focus on affordable housing with a target of 2 crore households by 2022 and creation of 100 smart cities. On top of that, government is focusing a lot on manufacturing sector with initiatives like Make in India, Atmanirbhar Bharat and so on. This would again create a demand for cable and wires. Finally, due to rapid urbanization, there would be a growing demand for cables and wires for construction of houses and buildings. Overall, there is a bright future growth prospect and hence on future growth, I would rate it 10 on 10. If you look at the revenues, KEI revenues have consistently grown from rupees 2033 crore in March 15 to rupees 4888 crore by March 20 at a CAGR of 19.2%. Although there is a slight dip in March 21 due to COVID lockdown. KEI profits have jumped from rupees 34 crore in March 15 to rupees 273 crore in March 21 at an exceptional CAGR of 41.5%. Overall, both revenues and profits have grown at a very good rate and hence on growth ratio, I would rate it 10 on 10. KEI operating margin have been consistent at around 10%. The recent operating margin is 11%. If you look at the ROE and ROCE, its ROE improved from 11.2% in March 15 to 24%. But then it has fallen and current ROE is 15.4%. Its ROCE has been more consistent in the range of 20%. The recent ROCE is 20.5% which is pretty good. Overall, on profitability, I would rate it 9 on 10. If you look at the debt to equity structure, KEI has significantly reduced its debt and currently it has negligible debt levels. Hence, on debt to equity, I would rate it 10 on 10. Its reserves have increased from rupees 288 crore in March 15 to currently at 1760 crore. Company has a total cash balance of rupees 221 crore by March 21. If you look at the promoter shareholding, promoters have reduced the shareholding from 46.26% to currently at 40.34%. However, both FII and DII have increased the shareholding in the company. FII have consistently increased the shareholding significantly from 9.9% to 18.49%. DII have also consistently increased the shareholding in the company from 12.81% to currently at 24.14%. This shows the confidence of institutional investors in the company. If you look at the valuation of KEI, it is currently trading at rupees 630 at a P ratio of 20, whereas its competitor Polycab is trading at a P of 28 and Phenolics Cable is trading at a P of 23. KEI PEG ratio is 0.6. Clearly, both PE ratio and PEG ratio suggest that company is looking undervalued. Overall, if we conclude, KEI is in the business of cables and wires with 40 years of experience in the segment. It has a wide range of product portfolio with experienced management. Company is both forward and backward integrated and has a diverse business across institutional and retail segment. There is a very bright future growth prospect of cable and wire segment due to increased focus on infrastructure in our country. The financials of KEI are looking solid with high growth and high profitability. The key risk is fluctuation in raw material pricing and strong competition from other companies. Overall, KEI is looking fundamentally strong. It is currently trading at a P ratio of 20 and PEG ratio of 0.6 that makes it undervalued. So in this video, we discussed about KEI Industries. What is your view about this company? Let me know in the comments. To learn more about stock picking, you can explore my website. Details are in the description. I will see you with another video. Till then, take care.